Good afternoon. This is Chris Brecher with a Simpler Stocks free video for March 29th, 2016. As you see here, it's about 22 minutes before the bell. Today was all about slow trading. Europe still has their Easter holiday going on, so we have very, very thin trading today, waiting for a cue from the overseas market tomorrow. Basically, what we've seen in here is a lot of divergent opinions. Now, what do I mean by that? Is basically what we have right now is you have the ESs in this holding pattern. Like we've been talking about, the E-mini futures are above their moving average. And on the 78-minute, you had this right here, this bear wedge on the right, that we came up and kissed it from underneath today. And that was a great sell opportunity intraday where it got overbought. But right now what you have is this bear wedge on the right. You have that on the left, we have negative divergence, but we're over every moving average. So what do you see in here that could give you a tell of future direction? Well, let me give you some confusing signs, and I hate to do that, but let's do that first. Number one, NASDAQ. I want you to see this on the NASDAQ, and what I'm going to do is unlink it. And on the left is the NASDAQ on a daily. On the right is the E-mini S&Ps on the right. What you see is the E-minis, and I use a lot the 200 SMA, not to say, oh, it's support or resistance, because as you see in the ES, it never worked. The whole idea is it's this far over the 200 SMA when the NASDAQ is under it. Now, either the NASDAQ usually is going to bounce above it to catch up, or the ESs are going to sell off to keep up, to follow the NASDAQ. Now, you might say, well, why should it follow it? I'm watching some other indicators that are starting to sell off. Look at the Russell in here on how low it is under the moving average. Now, is it going to roll over? Or is it going to try to kick in and catch up with everything else? You might ask, what do I mean by that? The Russell on a weekly looks like this, where it's overbought on a weekly, and it's at resistance. So the whole key is it's going to blow up through this resistance, even though it's overbought like the transports did, or is it going to roll over and die? If you put up the transports, you'll see what I mean. Here's the transports on a weekly. And what they did in here is overbought, got up to resistance, and sort of plowed a little above it, sort of peeked its head above it. So as you see in here, if you put this back up here, and you'll see that this, the transports, it's a big deal is if they roll over and the Russell rolls over and the NASDAQ rolls over, then the ESs are going to eventually roll over. Now, the whole reason about this that I then am a little waffling on this is because of a table that I've created for StockTwits. Just so you know, I was providing a ton of information for free on StockTwits. Finally went to work for Simpler Options because I said, why am I doing this for free? My goodness, this is... All of a sudden, I created 36,000 followers on StockTwits because I was having this good content for free. And I just thought, for the work I do, I should go and work for somebody and get paid for it. So just so you know, you go in here, and this is what I built on StockTwits. Called it the StockTwits sentiment table in here. Basically what this is StockTwits has a little sentiment box on the upper right on every stock. And what I found is when things are extremely bullish or bearish, it's a reverse indicator. So when I see the SPY was 70% bearish on the stream of StockTwits, which has hundreds of thousands of people, and I see the SPX 68%, and I see the Russell 77%, usually it means that the market is going to have shallow rallies, shallow sell-offs. Now, I know I've mentioned over and over that the lack of stock buybacks in this blackout period could lead to sharper sell-offs when a stock looks bearish. But all things considered, when you see this type of bearish sentiment, you get very shallow rallies, shallow sell-offs. So what I mean by here in shallow sell-offs is exactly what we got today. Here's the ESs on the left on a 78-minute, 195-minute. And on the right, a 15-minute. As you see, we had a nice little sell-off. We snap right back. Look at the Russell in here, and I'm going to link them again. And you'll see in here, the Russell looked like it was falling apart, that it was about to break this line on the left. Comes right back. That's the type of thing you get when you have a thin market and you have too many people leaning the same way. Doesn't mean we can't go down later, but you have to work off some of this excess pessimism. Just so you know, those are the type of things that sentiment gauge that we post all kinds of creative stuff every day on the Simpler Stocks forum. We also have an hour chat before the opening where I open it up to everybody. We have a live chat. I usually talk for an hour or a give and take where I'll answer questions, whatever makes everybody happy. We also have a forum where we post things all day. I've been posting all day. If I see unusual option activity, I'll post that as well. Just so you know, this is what we have in here is our offer. For $7, you get a 30-day trial. Basically $7, 30 days. As you see in here, you get the free videos, you get the premium videos, and when you go in here, you get also charts, forum, tremendous value for $79 a month. But you can try it for $7 and see what you think. So everybody take care. I will be with you tomorrow in our Simpler Stocks premium side tonight. We're going to talk about individual stocks, the Googles and the Amazons of the world, what the sentiment and how it affects that, and go over the stock to sentiment table in detail. And then I'm going to show you some setups and some unusual option activity I saw today. So everybody take care. I will talk to you tomorrow.